Hey, one piece of advice while you're working on your project too. I know that as I go through these, I'm often looking for oddities maybe in the financials, whatever you want to call it. But in the end, remember, you're making a recommendation as to whether or not you think a person ought to buy, sell, or hold, this particular company, stock in that particular company. So, a decent part of your financial analysis should also be some of those things that lead you to that decision, which may be very ordinary things, nice growth in income, nice growth in margins, great balance sheet, whatever the case may be. So, keep those in mind because that literally should make up a decent part of your analysis. And for some of you, that may make up the total of your analysis because the company just flies along doing great. I want to take a look at Cummins. I've had a request, to take a look at that and see what we ought to write about. Again, in the end, take a look at where the company might be. And I'll maybe give you an example of that here, right? Okay, this company has a total liabilities of 7.7 million, total equity of 7.4 million. So total liabilities and equity, 15. We in banking often looked at a debt to equity ratio, and we usually wanted it to at least be 1 to 1. They're pretty close, but not quite. A little less than 1 to 1 when I compare those two, right? The equity is a little less than the debt. Does that mean it's a bad company? No, but that means it's a company that uses a little bit of leverage, and thus would have a little more risk. Those would be some things that I would look at. I've spent a decent amount of time looking at income statements, and I think those are important. A little bit on cash flows, but this is a company that's got some interesting things on the balance sheet, and so I kind of want to take a look at that for that reason. Cash and cash equivalents. Yeah, you might comment that here. I mean, you've had a decrease in cash of $1 billion over the last 2 years. It was lower than that here, so you had a nice increase in cash there, which we might get a handle on here a little bit. We'll see. Short-term investments, those decreased quite a bit. So total cash and equivalents, 1.8. So it's down quite a bit. From here, what the heck is that down? $1.5 billion. So that's kind of substantial. You might take a look at why that might be. Gross plant equipment, I don't see a lot going on there. It looks like just some steady increases in gross plant equipment. They're probably adding, equipment, machinery, those types of things. Equity and other investments, not much there. Goodwill, same thing. Here, this got to be a little bit interesting, both here and then in 15. So this is 2013 and this is 2015. Prepaid pension benefits, okay? Prepaid pension benefits, and this is something that's on their balance sheet. Yeah, that's kind of interesting. So they obviously then, and they're not in these years. This could be a quirky date thing, okay? But they obviously then set aside $514 million in prepaid pension benefits. Those disappeared here. They might have gotten paid right to the pension, and then got resurrected here. Again, it could be a quirky date thing. That I'm not sure, but I would be kind of interested in knowing. Okay. Other current liabilities, you see that down here. You don't see a lot of difference in the short-term debt, accounts payable. Yeah, nothing terribly exciting there. Accrued liabilities, a little change in 13, to there. Again, kind of a quirky thing. Probably made up right here. You had a big decrease in accrued liabilities, but you had an increase in other current liabilities. Maybe just a kind of a fluky thing there. But this is where it got a little bit interesting too. Another interesting thing besides the pension deal that I would be interested in knowing about. Look at their long-term debt. 658, 698. Wow, $1 billion increase. So they issued some bonds okay, for some long-term debt. Maybe that's why cash went up substantially here. Okay, I don't know that for sure, but they might have issued some long-term debt and created some additional cash and equivalents for whatever reason. Don't know. I would like to find out. And I'd like for you to find out and tell me, so I don't have to go do all that work myself. Okay, but it is kind of intriguing, that it jumped up that much. Okay, $1 billion, and at the same time, their cash went up $1 billion. Basically, short-term investments went up quite a bit there too in 2013. Okay. Did they have an acquisition? Did they have a merger? Did they just have a need or wanted to convert some liabilities to more long-term liabilities? It's possible. Again, remember, we're talking about a company that's fairly highly levered. They went from about $6 billion here, okay, to $7.2 billion. So their liabilities increased about $1.3 billion, okay. And at the same time, their assets increased, about 700? So kind of interesting there, and some things I think to be a little bit concerned about. And let's go, speaking of being concerned about, I want to take a look at their income statement too. There's a couple things on there that I think are worthy of looking at. It's another one of those that when you kind of look at the numbers and you go, God, they just all look the same, okay? I don't see anything that jumps out at me there, unless I got my calculator out. But oftentimes when I hit this percentage, and then I start finding some things that are interesting. Its cost of sales and its gross profit, that's pretty steady. I mean, nothing there jumps out at me. R&D, relatively steady, within a percentage point or less probably. Sales and general and administrative expenses, those are also fairly steady. It gets a little bit interesting here in 2015, so that's this year, restructuring and merger cost, okay? But overall also, I found this kind of intriguing, that total operating expenses increased from 10% to 15%. Now, the part of this one is because of this, right, the restructuring, merger, or whatever. That's just 0.5% though, and that's still a big increase then. And it's a good 4% increase even if I take that out. And a little bit of it's up here. Don't get me wrong. There's some changes up there, and like I've said, even insignificant changes are important. From 10.18 to 10.95 is what, 0.8, and then this one's increased, so that's a part of it. But what about these other operating expenses? And this is in parentheses. So instead of it being another operating expense, it's actually some kind of income that's being generated. I don't know if that might be some investment income or something like that. I'm not sure how that's classified. Okay. And again, I'm probably going to take a look at the annual report to try to figure that out. But that's gone from contributing. Let me rephrase that. It's gone from being a positive in terms of operating expenses to here being much less of a positive in terms of operating expenses, right? It's the key reason, it's gone from 3 down to 0.14, so 3 percentage points difference. It's the key reason this has increased that much, okay? And likewise then, it's kind of interesting how these have just kind of flopped, right? But their operating income then has gone from about 15% down to about 10.8, okay? So this has gone from 10-something up to about 15. This has gone from 15 down to about 10-something. And so these have flopped, and it's all because of that operating expense. And so something's going on there with their operating expenses, and especially right here with that. Okay, and it'd be good to know what that is. Okay, and that's had an impact down here then. It's net income from 10.7 down to 7.7. 3% drop there. Same thing, net income available, about a 3% drop there. Okay, basic and diluted earnings per share didn't do too bad here in 2014, but fairly big drop from there to there in spite of the fact that they have been buying back shares, 193 million down to 178 million. So they've bought back 15 million in shares. So they've spent a little cash. Maybe they borrowed some money to buy back shares. Not necessarily a bad decision if they thought their stock was underpriced, and it might have been at that time. That was a couple of years ago, right, when they borrowed that money. So there's some ideas about Cummins, to take a look at. And again, I'm just giving you some of the starting points, and need you to dig in and try to figure out why those things might happen. Why, what's that extraordinary item there? If you absolutely can't find it, I might help you look. Okay, but only if you've exhausted it a whole bunch. So please, let me know if you got any other questions and whatnot as it comes along. And with that, I'm going to sign off for today.